You know, they say it takes money to make money. Not quite in my case. In my case, I just print money, as you can see, 8,000 or 9,000 and 2,300. If you want to take a look, I've spent $439 apparently. But if you account for the refund, I've spent nothing. I've made over $11,000. Crazy that you can just print money when you learn how to trade. I advise you guys to learn how to trade. Alright, yo guys, welcome back to another video. In this video, I'm just going to give an analysis over why price could be heading both upwards and downwards. I'll provide you the analysis and show you the reasons behind both. And at the end, I'll also give you my opinion on what I think could happen in the markets next week. So stick around to the end of the video. Hope you find value in it. Let's get right into it. Okay, so this is the US30 chart. This is the chart that I use to monitor the American economy and I trade off it. I'm currently funded $100,000 with Funded Next, and I aim to grow this funding to $1 million in funding by the end of the year. All right, so if we take a look at this chart, it's been quite volatile this year. We've gone from highs in the market. We opened in January, gone to highs, then we've made new lows, a lower high, and then we've crashed. From there, prices then bounced up. We've pulled back, swept liquidity, and gone higher. So the question is, where we headed here on out? All right, so if we just do a quick analysis of the markets, we can see that we was trading in a range. This range was confined to this zone here. The top of the range and the low of the range was down here. After we saw price break out of the range, we broke out into a fair value gap, and this fair value gap was right here. After we retested the fair value gap and we bounced, we saw price following the bounce, we saw price rally all the way back up into this fair value gap again. This was a discounted fair value gap. However, price fell to get above the fair value gap, and following this, we saw price decline further. That was this decline down here. After we declined, we came back to sweep liquidity that was resting right at these lows down here. After we swept liquidity and we bounced inside the fair value gap, which was this area right here. And if you're unaware about what a fair value gap is, definitely hit the subscribe button and take a look at some of the other videos I've presented on this channel. Give you a very good explanation of what fair value gaps are. Nevertheless, we saw price decline, sweep liquidity down here, bounce inside the fair value gap where we've had a massive rally higher. Okay, so where could we potentially be headed next? All right, so my base case for the market at this current moment in time is sort of nuanced. And the reason I say that is because although we've had a massive market rally, this rally could potentially be setting up as what I'd like to call a bear market rally. That occurs when you get a sweep of liquidity at a fair value gap, as we've seen, and then we see price head all the way back down to retest the lows. So that is a potential outcome of this scenario. If I just continue onwards and talk to you about the bull case for the market. So at this current moment in time, we've swept the liquidity resting at this area right here. After sweeping this area of liquidity, price also tapped into this fair value gap right here. And then we had price sell off into the close on Friday, give back all the profits, all the gains for the day, and was only up 38 points on Friday. Now, if we see price decline from this level here and close below this fair value gap, I would be confident that we would potentially sweep further liquidity resting at this level, and potentially even target the lows again. The reason I say that is because, first of all, we are in a downward trend, overall trend. When I say overall trend, what I mean is the overall trend of the market is down, pullback, down, pullback. So from this level, we have the option of going down again. And if we do go down in an attempt to target the lows, then we could see price, retest this low. And what happens here is going to become the major turning point on the markets. However, there's also a chance that we see price sweep the liquidity resting at this level and going higher. At this current moment in time, I cannot give you a certified or a confident description of what I think is going to happen. That being said, I can give you a series of potential outcomes. The first things first, the first place I expect price to target next week is this level right here. This gap is yet to be filled. Although it was partially filled, it hasn't yet been completely filled. So I'm expecting this gap to be filled. And once this gap is filled, we need to see what happens after we enter this gap. Because if we get a bounce from this gap higher, that will confirm the uptrend. Because we would see price fill the gap, we'd see price also make a higher high, and that would give me confidence that we'd potentially be targeting the highs. If I was to rate this scenario, I would say I'm about 50% sure that this is the outcome. That being said, 50% also leaves another 50% of potential outcomes. I would like to allocate another 25% to this next outcome. The next outcome is we potentially see price pull back in an attempt to sweep all the liquidity resting at this area as well, and we have liquidity resting here. If we see price pull back into this area, this fair value gap here is going to be extremely important. We need to see what happens at this fair value gap. If price pulls back sweeps the liquidity here, and bounces off this fair value gap, and then continues higher, this is also a confirmation in the uptrend. However, obviously we would have had further selling pressure, and a lot of people would have been taken out of the markets who would have positioned long in this area. And when I say long, I mean buy trades in this area. They would have had their stop losses below these lows. And if price declines to here, we'd see all of these people forced to liquidate the market, and that could fuel further decline. That being said, the decline doesn't have to close below here, but a decline to this area would force these buyers to sell the market down. So this next outcome of this scenario would be price pulling back down, sweeping out all the liquidity here before we see price go higher, all the way up, back up to new all-time highs. All right. So we've got two outcomes. We've got two scenarios at the moment. If I was to give you guys a third outcome, and this one I'd allocate the final 25% to you. This is where we just see price completely decline off bad news. And if I was to mention the news that I'd be talking about would be Moody's downgrading the US credit worthiness down to what we call double A. So I had a brief conversation with ChatGPT in regards to trying to figure out what the most likely outcome of this scenario was. The downgrade of Moody's credit rating of the US government debt, and you don't really need to know too much about this, but it could have effects on the markets. Bond markets and the stock market usually are used both by investors, and they usually allocate a proportion of their investments for different reasons. They invest and allocate, but a downgrade could potentially have different outcomes in the stock market. And I had a conversation with ChatGPT about this, and they said basically I asked ChatGPT whether or not fund managers have to reposition to allocate if US government debt receives a downgrade by credit agencies like Moody, and ChatGPT basically said yes, this does happen. So this could be a catalyst for further decline in the markets and a retest of the lows. That being said, I'm not too sure whether or not the retest of the lows would see price actually break below the lows, unless things really got bad in terms of bond yields and interest rates going up. I know this might be a bit confusing if you're not too familiar with these terms. You might have some research to do. Nevertheless, I'm not expecting the market to completely crash from here. That being said, it is a possibility because, as I've mentioned already, this area only presents a lower high in the overall market's direction. We've seen the market go up, go down, lower high, bounce, lower high, and now this could be another lower high and see price correct further. So we're not completely out of the woods. I give this a 25% likelihood outcome. My most likely outcome for this scenario, as I mentioned already, is that we probably just see price potentially just refill the gap, bounce inside the fair value gap, and then we continue high to all-time highs. However, there is still also another scenario where price sweep all this liquidity and then continues higher. That won't be a terrible situation, still possible, but another 25% likelihood is that we see price, pull back all the way to retest these lows down here. And once we retest and sweat the lows, then we go higher. So we have three different outcomes here. I would recommend that if you're not too familiar with trading, you definitely hit the subscribe button and hit the like button. And watch some of my videos, because I do present and I have got videos on my channel about, learning how to trade US30, how to be profitable about it. So yeah, I am a funded trader. I do make money from trading consistently. So and I have been trading for quite some time now. So I do have value in my comments. I'm not trying to sell you anything at this current moment in time. So yeah, it will be beneficial for you to subscribe to the channel. That being said, I'll see you guys in the next video. My name's Tate now.